Hi, good afternoon. Welcome to LinkedIn Live. I'm Ann Palmer with Celerity, and I'm joined today by Jason Heinrichs. How you doing?
Hey, great to be a guest on your podcast. So exciting. Or
Yeah,
LinkedIn Live, I should say.
yeah, I know they kind of overlap a little bit, but we are live. Won't say in the flesh here, but live. So Jason Heinrichs, my guest today, is a parent of two kids, the CEO of Alloy Labs. Jason, I know that you bridge this gap between large organizations and fintechs. And before we dive into the meat of this conversation, because I know that I have a lot of questions for you, I was wondering if you could set the stage a little bit. Give me context for your background, for your point of view, and then follow up with what's changed over the last few years.
Well, setting the context, I stumbled into financial services in 1994. I'm a mechanical engineer by training, fluidics to be exact. And my first engineering job was from one of the oldest financial technology companies with one of the oldest technologies out there, the printing press. I worked for the largest manufacturer of checks, right? And so what's changed? Well, yesterday we're doing a home renovation, as you've heard. The landscaper needed a check. And guess what? I'm like, I don't know the last time I've written a physical check. I need to go find a check. And I finally found a checkbook that, is dated circa 1999, maybe was the last check that was written out of it. So a whole lot has changed, not just in the span of that 25 years, but a lot has changed due to COVID. And it's not that COVID, was the cause, it was an accelerant. If you look at a lot of the strongly held beliefs related to how banks work, it was just a catalyst of a year to challenge those beliefs that the branch being essential to delivery of financial services. There were some very consequential actions taken by regulators in how they approach financial technology being delivered by startups and moves made by some of the biggest players in the tech and banking space. So the world is, feels like it was spun on its head in 2020 for more reasons than one, but it's really just the beginning for financial services.
Yeah, we are seeing that rapid evolution with our clients too. So Celerity comes at the world. We do a lot of financial services work from the lens of customer experience, the people, operational excellence, the process, and then agile enterprises, responsive technology. Um, that shifting mindset from brick and mortar banks to digital first experiences. Tell me a little bit about that, and then let's zero in on what questions do you think that leaders should be asking in relation to banking experiences, but that they might be overlooking?
Yeah. You know, we hear this, especially from the smaller financial institutions, whether it be a community bank or a credit union, is our customers like to come into the branch, right? And they love the relationship and the personal service. And that may be true that they, like the people and getting a dog bone at the local branch and, name being remembered. But what COVID taught us is if they don't have to go to the branch, they might not opt to do that. Not that it's going away in its entirety, but this digital transformation is, when I first got into banking, so post deluxe, I ended up working for one of the largest providers of student loans and getting them into the digital banking world. And in those days, they're like, well, the financial technology is not even set up for it. So everyone would say, well, let's just treat digital as if it's another branch and emulate the branch like experience into this. In fact, if you looked in the core, a lot of us, what we do is set it up as branch zero equals digital. And what we've learned now about the user experience is customers don't want the exact same experience online. I'm using online, I'm using mobile, I'm using the branch, I'm using them for different things, different purposes. And each one of them needs a unique journey. And it needs to be tailored to what problem am I solving when I'm choosing to use that platform. And it needs to be seamless. Omni-channel was, the buzzword of 5 years ago, and everyone thought, oh, the experience should be identical regardless of the channel you come into. And what we understand now is customers don't want that experience. Omni-channel means my data moves seamlessly across those, I move seamlessly across those channels, but what I do and how I do things there changes dramatically.
Yeah, and it seems like there's an extremely low cost for switching. So you work with a lot of small and mid-sized banks and credit unions. those organizations are now forced to compete with larger entities where so clients can now have this world-class experience digitally that where before they might have been constrained geographically or physically. What are you seeing in terms of that impact and innovations? What can small and mid-sized organizations, financial services organizations, do that larger ones can't? Like, how are they innovating or outpacing?
Yeah. Well, there's a catch-22 here, right? And this is why we actually founded Alloy Labs, which is a consortium of 50 banks that work together to drive innovation. One is there's a digital arms race, and you have to keep up. And so in the digital arms race, winning is actually just playing good defense. How efficiently can I keep pace with where the leaders are going and meet those minimum expectations for my customers? But the smaller institution, be it a bank or a credit union, is never going to win in that game. You're never going to keep up because the arms race never ends. But where they can win is to leverage the unique characteristics of their market or their customer base and to redefine what it means to be community rather than just being a subscale version of a big bank, right? Think of you could go to a $25 million bank, a $25 billion bank, and a $250 billion bank. The product suite looks nearly identical. And so for community banks and credit unions to be able to say, for our customers, we can solve this unique problem. And I'm going to go solve that problem better than Chase, B of A, Citizens can do because they're mass market providers, right? The difference between, hey, do I want to get my wedding cake at Costco or Sam's? No. But do I want my cupcakes there because they're inexpensive and they do the job? Yes. This is the future of banking where I'm not going to do everything for everyone. I'm going to pick where I go play. And it's going to be digitally leveraged. That's how I'm going to be able to scale it.
Oh, that is a really interesting answer. So I was talking with a mid-sized credit union, and one of the challenges their CIO is facing is how do I better leverage fintechs? How do I plug them in to our existing infrastructure? What do I need to know? This sounds like a problem that you and Alloy chew on all the time. Can you talk to me about overlaps between fintechs, small and mid-sized banks, and what you see happening there?
Yeah, as my wife will tell you, sadly, this is all I think about and talk about. Our 4-year-old's getting pretty conversant in talking about financial technology. The smaller institutions absolutely need to leverage these other players. And unfortunately, most of that to date has focused on lending, which is important. A whole lot of the innovation focused on lending, that is where banks make most of their money. It's where there's a lot of value exchange, regardless of size of institution. Where they're focusing now are on tools, where there are additional opportunities to, through a partner, develop new experiences. The big players can afford to go build that on their own. Smaller players can't. Now, the hard part is it feels risky to do something new. What if it doesn't work? And so that quest for certainty slows banks down and credit unions down. We hear this time and time again when we talk to a bank or credit union, and I'll ask, what is your innovation strategy? And the answer 9 times out of 10 is we're more of a fast follower. Well, that actually only works if you're fast, for one, right? And most institutions are not actually fast in how they operate because they want this level of certainty. Second thing is, if you're a follower, you're never actually going to take the lead. And by the time you realize who you should follow, that takes 2 to 4 years, maybe 5 years for something to reach ubiquity that you can go, oh, we really need to be offering this because everyone is offering this. And then you decide to move, and it takes you, a year or two to actually roll it out and get it right. That ball is now moved 5 to 7 years down the path, and the fastest players are moving faster and faster and faster. So if you're always 5 to 7 years behind and the gap is growing, you're never really going to keep up.
That makes a lot of sense to me. So I want to continue talking about fintech innovation. I want to hear a little bit more about the trends that are most exciting to you. And then if I were a small and mid-sized bank, what criteria would I use to assess so that maybe I can shorten that time from 5 to 7 years following to like 5 to 7 months? How do you
so being a fast follower is not necessarily a bad strategy if well deployed.
Mhm.
just pick who you're following. Don't follow the pack. Pick a set to say, here's who we most want to emulate from an experience point of view. And make it a basket, not of your peer group as a regulator would define it, like the credit union across the street, in your zip code of similar asset size and a similar product suite, or a community bank of a similar efficiency ratio. Not the right way to slice and dice. Look at from the customer problems they solve and the experience. And that could mean, hey, I need to actually be looking at what Chase does, and I need to be looking at what Chime does, and I need to be looking at, wow, that credit union nails it on this. I need to look at that smaller audience and be able to follow where they're going. Think of it as if I'm looking at a buoy thrown into a big wide ocean. Tracking its relative movements is really hard, but you put it in a small pond, the impact of like the shifting winds, well, suddenly that has a huge impact, and you can see the change a lot more rapidly.
So let's talk a little bit about shifting customer expectations. You have definitely written about this a lot. What trends do you see in terms of personalization and responsiveness?
Yeah, so we often confuse, and this is again almost regardless of size of institution, there's a difference between being personable, and personalized. And technology actually makes this a lot easier to both understand and deliver on. But the neat personas and segments that we used to put people into, to say, Jason is a 48-year-old male father of two living in the Midwest of a certain educational capacity. He fits this box. Well, that box probably is a lot less relevant. That to be data driven today, financial institutions have a wealth of data that historically we've not done a good job of mining to look for unique insights, and have not done a great job of leveraging technology that can get down to the individual level to say, the Amazon recommendation engine of financial services, to say, hey, Jason, customers that look like you are also buying this thing, and it looks
Yeah.
like this. Do you just want to push the button and add it, to your cart? That's the future of financial services. Is data makes it rich and personalized, that the delivery is contextual, and that it is seamless in how I actually purchase it. In fact, I'm not going to be thinking I'm conducting a financial transaction anymore. It's going to be embedded into the whatever else I'm seeking to accomplish.
Yeah, I think that will be a fun world to live in, one where there's less friction in that. So, as that digital first world evolves, I see financial institutions aiming towards a frictionless and secure transaction for everyone, everywhere. So, also accessibility. But how do you balance security and simplicity in those personalized or personable experiences?
Well, and this is the catch, because doing something new inherently, involves risk. There's risk the customer won't like it. There's risk that the security might not work as well as we first expected. And this is why test and learn is so important, not just to make sure we're meeting the customer expectation, but that as we're delivering it, as we catch things that say, oh, unintended consequence, didn't think that was going to happen. Like, who knew that, the scammers, because scammers and fraudsters are amazing at their ability to hack what we do and what we thought was foolproof. That can't stop us. We just need to be monitoring and always updating like they do. The idea of continuous deployment within financial services is sadly relatively new, but it's how we actually drive out new features without fear that, hey, we've done the best we could, but now that we understand how it's being used, this is how we're going to continue to evolve it.
Yeah. So you're describing that organizational agility, the ability to ingest data and feedback
Yeah.
constantly and then to pivot with it. Before we got on, we were talking a little bit about regulatory compliance. Can you talk a little bit to the way that you see that evolving so that it's faster, and who holds the keys to regulation?
So regulation, my view, and I've written extensively, and regulators don't necessarily like the description I gave, but I say it's monumental. And think about a monument. Normally, monuments are built to something really, really, really bad that happened. And then we take a long time to both raise the money, plan it out, have to listen to all of the special interest groups when it comes to that, monument going up in a park before it can get approved, and then it's built. But once it's built, no one actually goes back and revisits it and says, does the monument serve its intended purpose? Regulation happens much the same way. We wait for something really, really bad to happen. We then involve, whether it's regulators or legislators, we spend a huge amount of time trying to think through and solve for everything simultaneously. We then roll out this massive thing that takes years for the financial institutions to ingest. And then we forget about it, right? We spend very little time going back and going, does this regulation still make sense? If not, tear it off the books, because actually the carrying cost of having it is too great. So I think we need to move more towards a continuous level of regulation and improvement that is also test and learn driven, that it also requires the regulators, and we've seen a great stance, especially at the FDIC in their approach to this, to be more proactive. Don't wait for the bad things to happen, but give guidance and a stance in advance about where we think the puck is going and how we need to apply this and work together. Now, there will be some on the very progressive and consumer protection side say, hey, a cozy relationship between regulators who are supposed to protect the consumer interest, especially in industry, is bad. And there's some equally swing far to the right on the conservative side, which is all regulation is bad, must hold regulators at arm's distance related to this. The reality is, in the middle is the safest for consumers. That it needs to actually take in mind that if we don't innovate for our customers, they're either going to go find it somewhere else. So innovation is happening in the back alleys outside of the purview of regulation, or they're missing out for a huge amount of the middle part of America, especially, but I think it applies very broadly. Financial technology is really also about how do we improve financial inclusion and access to better products that the very wealthy have had access to for a very long time. Most innovation to date has happened at the both extremes. The very wealthy because they can afford it, or the very poor because they don't have options and I can charge them a lot. And if you look at the big middle swath, 85-95% of Americans could be better served with better products and innovation that needs to be done under the purview. I see someone called out the FDIC's tech sprint, right? That's exactly the sort of thing that is going to make that difference for on it. And we also need to not be too arrogant to look at and say, what have others done? In the UK, the FCA, the Financial Conduct Authority, has done a phenomenal job at pioneering the idea of these tech sprints and regulatory sprints, and pulling in startups and financial institutions and examiners and really working through and acting like a startup and improvement.
This might be a good chance for you to mention your podcast, Breaking Banks, and some of the guests that you have coming up here. I think that would be super relevant.
Yeah. So Breaking Banks is the largest financial service podcast in the world, which just says there aren't that many financial service podcasts in the world. Actually, there's a lot coming up and there's some great content going off. We'd love to collaborate. Our founder, Brett King, when he wrote his book, Banking 2.0 in the mid 2000s, actually the podcast, was one of the first out there talking about this. And what's been amazing is the podcast has grown. And now we have Breaking Banks Europe. We have the Next Gen Banker, hosted by David Reiling, the CEO of Sunrise Banks. We've got the Tech on Reg podcast, hosted by Dara Tarkowski. We've got the Finovate podcast, hosted by Greg Palmer, the Finovate FinTech show. This is their greatest hits. As we've become a network, the guests that we've had come on have been phenomenal. And so one coming up is actually going to be the head of innovation for the FDIC. And we love having, the regulators on. We love having the tech startups on. We love having the adjacent industries, coming on. And so we were fortunate to have McAfee on himself. John was a phenomenal guest talking about the future of crypto and where he saw it going. So no surprise that episode has seen a lot of action in the last few days since his passing.
Yeah. You just mentioned crypto. Do you think that crypto and CBDC will change the banking business model?
I think it will, just not in the ways that we think today, right? Not that I know the answer. You can just look at and say, a lot of this, we're in the, hysteria phase, and now possibly entering the pits of despair phase before the reality comes in. If we look at crypto as a currency, what makes a good currency? Ubiquitous acceptance, stable. I hate it when I order a pizza and by the time it's delivered 45 minutes later, it just costs me as much as a Ferrari. And the last thing is we need to know it's going to be around, right? And that's why, historically, if you don't have an army, you don't have a currency, has been the rule of the land. I think we're going to see that change because, again, making electronic money accessible to the masses is going to change what they can do and how they can function. Now, if you look at the DeFi movement, this idea of, hey, let's take out centralized banking and decentralize, everything, crypto doesn't actually work that way so effectively, because if every transaction is kept on the blockchain, right? Like imminently, like I don't know where my dollar bill has been in my wallet, but in the future, I can know where every Bitcoin has been, right? When it becomes hackable. And those things will come to bear, right? Nothing is unhackable. And the changes that crypto are going to open up and decentralization are going to open up are going to be massive. We're just not at the point that you can point to and say, that's it.
Yeah, the next question I have here, that follow up, is that Bill Gates said, you wrote about this, that we need banking, but we don't need banks anymore. So tell me about that open banking and what you see on the horizon beyond crypto.
Yeah. And so there's two parts to open banking, right? There's the uppercase O, uppercase B banking, which was enacted in the European Union. And it is the idea that customers should have access to their financial information. And they came up with a list of the APIs that every financial institution was needed to make available so that a customer could basically take their data where they wanted it for the things they wanted to do, breaking down this idea of a monopoly by the biggest of the banks. Then there's lowercase o, lowercase b open banking, which is this idea of my money begins to flow and live in different places, that decentralization at the customer level, right? And so Amazon isn't a bank, but for all intents and purposes, it functions as a bank for me. And Starbucks isn't a credit card processor, but for all intents and purposes, my utilization of their rewards code and checking out at QR, they act in that way. And so open banking of the future, this idea of a centralized bank that holds my money, that I write checks out of, that I do bill pays out of, that I visit only their ATMs, is a closed network, is going to get broken down, right? And so I like to think of banks of the future are a little bit like, the router in your house, right? No longer is it like the all in, does everything, my computer is plugged into it. That's where I do absolutely everything. My printer is plugged into it. It is going to be the information, the money flows in and it flows out. And it's all of these other little endpoints that are much more specialized. And as I mentioned, most of those, I'm not even going to think of as a bank. They're embedded, right? Was doing a talk coincidentally with the FDIC. It was part of this academic study, and the academics were looking at it with a lot of surprise that Rocket Mortgage, the largest mortgage originator in the country, actually charges more, right, than banks. On average, 35 basis points more. And they're like, but they have all of the cost savings because they don't have like a lot of humans running around doing this. Why would anyone go get a mortgage from Rocket Mortgage? That just doesn't make any sense. Like, that's an irrational approach. Well, it's only irrational if you think about it as the banker, not as the customer, right? No one wakes up in the morning and goes, hey, I'm kind of bored. You know what? I want to go get a new mortgage, because there's nothing I like more than having to resubmit 3 months of, financial statements, prove that, yes, I have not had a W-2 job in 17 years and I'm still financially solvent, all those fun things, right? But what do I do? Well, I move, right? My career takes me somewhere. I have kids. My kids leave for college. At the edge of money is where life happens. And as banks and financial institutions, we live at the center of money. All we think about is the money coming in and the money going out. To that customer's life, that is just a blip on my user experience. And so if my wife and I finally found a house that we could agree to at 2:00 on a Saturday afternoon, and it was long after our pre-approved mortgage had expired, and I need a loan and it needs to be done automated and at 2 a.m. on a Saturday, or I guess now bleeding into Sunday, guess what? Rocket Mortgage looks great. 35
Mhm.
basis points is a lot cheaper than another 18 months living in my parents' basement while doing, looking for a house.
Yeah, yeah, it makes a lot of sense. Let's broaden that lens a little bit to financial inclusiveness. How does Alloy Labs, what role do you play in changing that equation for financial inclusiveness?
Yeah. So this is one of the essential places that community banks and credit unions really play an important role because they're embedded in the community themselves, right? It's the person that you do see walking down the street.
Mhm.
Now, we're fortunate we partner with the Financial Health Network, formerly known as the Center for Financial Service Innovation, and Jennifer's on our board and have really been focused on how do we improve delivery. And this is why technology and innovation is so important because left to their own devices, people will not always make the choice that's in their best interest because it's scary. Over 85% of Americans say that dealing with money is the most stressful thing in their life, specifically running out of money. If you think about that, there's only 15% of America is not stressed about money. And that probably means, the majority of those are just delusional when it comes to it, or, the ultra wealthy. And so if it's so stressful, how do we alleviate that stress? And this is where technology comes in to play, not only improving the delivery and the access to products, but improving the transparency and the delivery of advice to customers in a safe channel. And we can use
Mhm.
the data that we have just, tons of now to drive better insights and deliver to the customer who's historically, if you think about the process of making a choice, like I know I should be saving for retirement. I don't know how to do that really well, but thanks to the internet, I'm going to go do some research. And I do all of the research, get the work done. I decide this is what I should be doing. I should go invest in this. And then life happens and I get busy and it feels kind of scary. And so instead, I'm like, well, you know what? I need to take some more time to think about it. And then 6 months goes by and a year goes by. And the incremental cost to me, like the pain I feel today, is next to nothing. But the most powerful force in the universe, compounding interest, is what I'm missing out on. I don't feel the consequences of that for 30 years. Right. And so this idea of we can improve financial health through better understanding and through taking the friction out of the delivery for you, and that you can actually see the results as they're happening.
Yeah, I think that's been interesting to watch the improvements that financial institutions are making in terms of educating their customers and really speaking to from the customer point of view, being fanatical about that. Question there about financial inclusion faster. Do you think that CBDC will improve that?
Talk about the zinger of a question to come out. I think it will. My concern is back to the monumental, right? Anytime we talk about government, we can go back to the monument analogy. Is I don't think we can think our way to the right answer in a way that we roll it out and then do a mic drop and say, boom, got it, financial inclusion solved. I think it's going to take the series of sprints and pivots before we figure out what and for those who don't know, a CBDC is a central bank digital currency. So it's kind of the opposite of the DeFi movement where money has no government. This is the central governments, whether be somewhere in Eastern Europe or even the US toying with it. Do we create a digital currency? I do think it has that potential. It's going to be hard to deploy because before that, we also need to level the playing field for digital access. There are way too many Americans who don't have access to broadband. COVID, really highlighted this. The number of people whose only computer and access to the data and services is this. That is not ideal when it comes to education or living life. We need better access, especially in rural areas,
Yeah,
for this idea of inclusion to really take root.
that was a great question. Thank you for answering it. If there are any other questions, please get them in. I want to be mindful of time. So one thing Jason, that I'm a little bit obsessed with is leadership and philosophies of leadership. So let's pull back from financial tech for a second, and let's talk about your philosophy of leadership and how you have how that's been shaped in your life.
Oh, um, it has certainly been an evolution. One thing that has been like a very stark realization is, I'm clearly white, right? People can see that I'm clearly male. If I was standing up, you'd say I'm also kind of 6'1" and kind of fit all of these averages. I'm also straight. I live in relative privilege. That is not something I would have admitted. I was the second in generation to go to college. My dad was the first on either side of the family. We're poor pig farmers from the Midwest. But a bunch of like the evolutions really over the last 10 years has been around how different my experience has been than the other people. And I tended to, pun intended, whitewash a lot of this until my eyes started getting more and more open to it. Right.
Mm-hmm.
Like I remember in this idea of understanding I am not necessarily like other people and I need to walk in their shoes has both shaped how I approach customers and the products we develop, as well as the teams that, I try and lead, whether it's the members of Alloy Labs or the friendships or, our team itself. And I'd say that evolution has not always been an easy one.
Mm-hmm.
I remember the first time one of my Black friends at West Point told me the existence of this talk because I was making fun of him and how he interacted with the police when we were underage and drinking on the streets of New York. And hearing, his experience being so fundamentally different than mine, even though we wore the same uniform. And then, an aha moment when I was working for the large private student lender and understanding it was, not with ill intent, but we were making it way too easy for students to get access to debt that they can't get out of in bankruptcy. And if you look at the cost of education was skyrocketing and our mission was noble, we're empowering America's future in education. Yeah, we're also empowering them to get into debt that will, cripple their lives for the time to come. Not that it's totally ruined, but it has had a huge difference in their life, right? And that's why I
Yeah.
co-founded Perk Street, the first banking as a service company that was meant to, how do we actually align the financial institution with our customers, right? Then, sorry to keep ranting, the aha moment in, this was 7 years ago now, that realizing how underrepresented female entrepreneurs were. And so my wife and I in our angel investing had already made the change around the time of Perk Street that we would only invest in things that we felt made the world a better place. And then as part of that, I realized if you looked at the underrepresentation of female founders in financing, and I looked at our portfolio, it was abysmal. And so now, not only when we invest, do we look at the world as a better place through that product, but what is the commitment to diversity from the startup we're partnering with? And so I'd say the evolution of leadership, for me has just become this journey of self-awareness, and that
Mm-hmm.
I can't, paint the world with the lens which I've been gifted to have, and I'm responsible for helping change it.
I love that. One of the mantras that I've been working with lately is just no excuses, that we are responsible for creating the future that we want to inhabit. When you're looking for information, smart, reliable sources about particularly fintech here and trends, what are the top three sources that you go to?
Oh, easy to pin down. Well, one of them, unfortunately, is no longer a great source of information. Lindsay Davis spearheaded CB Insights and
Mm-hmm.
built the famous fintech graphics everyone. And she joined a company called Atomic, and it's a great gain for Atomic, great loss to the industry because her insights were so good. But my, can I do 4 go-tos?
Yeah.
Frank Rotman of QED, you need to follow on Twitter because he does Twitter threads all the time. And Frank is just hands down one of the smartest people that I've ever met. The writers I go to, Alex Johnson and Ron Shevlin, both at Cornerstone. Alex does a separate newsletter, and Jason McCullough out of Amsterdam, FinTech Business Weekly. Like those, I get up early on Sunday mornings because that's when Jason publishes to read before the kids get up. Right, like lovely. It's my new version of the New York Times paper version and a cup of coffee is Jason's FinTech Business Weekly and a cup of coffee.
I love it. Porny, are you writing these down? I think that was a question that she came in. Another one, what, this is probably the last question. What prompted you to start Alloy Labs?
So great question, Parani, is kind of by accident. So we post Perk Street moved back to the Midwest to be closer to family. I was getting calls from banks saying, can you help us be more innovative?
Mm-hmm.
And, while lucrative and fun to kind of travel the world talking about how do you become more innovative, the realization was really that they didn't need new strategies. They needed new tools, right? That the old way of strategic planning is, mandated by your regulators led you down a path that emphasized planning and not execution related to doing new things. So I developed a methodology that's now taught at 3 of the graduate schools of banking called FIRE, which stands for Fast, Iterative, Responsive Experiments. And I also like to tell financial institutions they need to light a fire under their expletive to start getting things done. And then the next step was the aha is like, no matter how fast a lot of these institutions might be able to move, they're at that competitive disadvantage. So how do you, level the playing field? Well, what if you look at historically, community banks are an interesting club, but no one would accuse them of being collaborative, right? They, credit unions are a 4-letter word in their world because they don't pay taxes. And that other bank across the street, I can see their numbers. So I'm always comparing their numbers to my numbers and, how do I stack up? But if you find the innovators, right, because I'm deeply committed to community, whether that be local communities or groups of people defined by sets of beliefs, I think community banks play this essential role. And it's going to be a shame if they go extinct. But we are going to see there's a huge number that are on right now a slow glide to irrelevance. It's going to become a very fast glide pretty quickly. And they need to do something different. And for me, Alloy Labs was this, it came together as a group of just over 10 banks 3.5 years ago. And it was hey, what if we went and, really tried to take on the industry and what we did? And I found 12 banks crazy enough to do it with me. And they're like, well, what are we going to do? I'm like, I don't know, but it's going to be amazing. And, I can, say with confidence almost 4 years later that, it's been amazing in terms of some of the things we've done, some of the announcements we have coming out, the investments we've made in the fintech partners ourselves, right? So now by acting as a group, the banks act as a strategic investor to deepen these partnerships. We've done partnerships with startups that are outside of banking that allow us to embed our services into what they're doing, that approach our customers really more holistically, both on the small business and the consumer side.
Got it. That is really, really cool. The last thing I want to ask, book, movie, podcast recommendations. What are you enjoying? What do you think that others should?
Books. Well, I'm in the midst of heavy Dr. Seuss right now with
You have a 2-year-old?
The 4-year-old is learning to read and teaching her that memorization is not the same as reading. And the 2-year-old thinks Hop on Pop is an interactive book that you then hop on Pop. Also not cool. I just refinished The Soul of Money. Like there's 2 books I would say that kind of push the boundaries of things for me. The Soul of Money was one of them. And I just read the Dalai Lama's book on happiness. Were kind of the 2 intellectual splurges I've allowed myself, because one of the places that I think we get hung up when we talk about finances is that fear factor approaching it. And this idea, like, do I have enough? Can I accumulate enough? In the world around us has kind of taught us, the rat race. If I'm winning, or someone else is winning, am I losing? Do I need more? How do I compete? And it really has kind of warped our sense of self and happiness. And was part of a debate about this not long ago where someone was looking at the U.S. productivity relative to several of the Nordic nations. It's like, look at us, how productive we are. But if you change the score and you look at, hey, we might be the most productive, but we also are really, really, like, we're a third world country when it comes to happiness. And, thinking through the role of money in that is where I'm spending a lot of my time. And, I forget who said it, but, this edge of money concept is like what I'm obsessing about now and fleshing that out. I would also add to that is, if you're deep thinking, in this world, David Reiling wrote FinTech for Good, is a quick read and, easy to digest. Theodore Lau's book on tech for good just came out, from Unconventional Ventures with Brad Leimer, is absolutely fantastic. I'd add that, to how you're thinking.
Thank you so much for being my guest and for sharing your thoughts. I can't wait to go back and listen again and even more deeply. I really appreciate your time.
Thanks for having me.
Mm-hmm.